Okay, welcome everyone. Today we are going over my model. So I trade the PRB protected rebalance model. This is a model that I made myself. Now obviously I didn't make any of the concepts, but it's just the way I put them together and the way I view the market is something that I have found works very well for, for high win rate, decent RR, and it's easy on your psychology and it's just overall easier to do. It's mainly based on ICT concepts, so really to understand this, you need a decent understanding of ICT concepts, right? Preferably, you've already traded some sort of ICT model, whether that be IFVGs or breaker blocks or just 2022 model, whatever you've traded, right? Because this isn't much different from that. It's just a different kind of lens, if you will, a way to look at the market and a way to approach every day to maximize your consistency and to improve your win rate. Now, PRB stands for protected rebalance, right? And the reason it's called that is because they are the two main things we use that most models that don't use, right? And they're the two main things you're looking for. So you're looking for protected swings or high resistance liquidity, which I will get into what they are, how to find them. You are looking for rebalanced protected swings. You are looking to always trade away from high resistance towards low resistance. You are allowing rebalances to occur. And most importantly, what I find with this model is you are reacting. You aren't predicting, right? And what I mean by that is how you approach this model is you don't need a set bias and then a set mid time frame narrative and then your entry model. You come into the day on your entry time frame most of the time. You wait for price to form what could be a protected high, a high resistance high or low, and you then confirm that it is, and there's ways to do that. So what I mean is you're not anticipating which way it's going to form or where it's going to form or when. You're letting it happen, and then obviously you're not just pattern trading it, you are getting confirmation, but you're getting the confirmation after. So it's very good in terms of like it's just simpleness, right? Like you don't need to do all this madness and predict the whole market for the whole day. You kind of let the market show its hand to you, right? So with that being said, we'll go over a basic drawing of the model, right? So the idea is this, right? You've probably seen a drawing like this loads of times, right? Obviously this line is a high time frame key level, whether it's a liquidity sweep or a fair value gap or whatever. And where this model differs from most models is you aren't trading the IFVG here or the IFVG here, and you're not trading the order block here. You're trading after the rebalance, right? So what I mean by that is we tap our key level, right? We put in a low. You think this wants to be a protected high resistance low that delivers us to low resistance liquidity, but you aren't sure. So how do you confirm that? One, you look on the higher time frame, right? Does it make sense to put in a high resistance low here? Is there, say this is the 1 minute, right? Is there a 15-minute gap here? Is there an SMT with this low? Is there any lows to the left here, right? If there's no lows to the left and this is a low inside a 15-minute gap and we displace from it, this is likely to be a protected low that does not want to get ran, right? And what protected low actually means is it's a low that obviously in this case it's a low, but it could be a high. A protected swing is a swing that doesn't want to be ran or shouldn't be ran if you are correct, right? So what I mean by that is if we put in this and you believe it's a protected low, then you want to see whatever targets we have here ran first, right? So say we've got, just say the internal high, say we've just got an internal high, you'd want to see this ran before the low. So it's basically you're saying the market shouldn't go here and it should go here, and you're just positioning yourself in that, right? Now, if you were wrong and the market was to go here before there, you would then be able to flip your bias, right? You wouldn't say, oh, that's a resweep and we're going to go for the high now. That can happen, but majority of the time, if we put in a good, what should be a protected low, we displace away from it and then respect the range and we still go back here, that just means your bias is wrong, okay? But what will happen most of the time is this, and this model you are trading after the confirmation, right? You're not trying to catch the bottom of the move, and what this does is this allows you're always trading after the rebalance of a range, which means a few things, right? Which means one, you're going to always get a pretty good entry with minimal drawdown. Now, the reason I say that is because obviously the market moves in ranges and it rebalances ranges, right? So if you are longing anywhere in this leg, the initial displacement leg, right, which is what you're taught to do with, the standard IFVG model or fair value gap model, then you are longing sometimes even pretty high up. We're rebalancing and then we're running, right? Which, you know, is fine, but all that's doing is that's killing your risk to reward. Because if you're long in, say, the IFVG here, to be able to have your stop safe, it needs to be down here. And then if you're targeting the highs here, you know, as you can see, you're not always getting the best risk to reward. But what you do in this model, what's different, is you let this first trade kind of play out, or this first move. You wait for us to come back lower and rebalance the leg, right? And you then wait for a reaction off of there. Because once we have a rebalance and then we trade away from the rebalance with confirmation, this is now your rebalance protected swing. So that means if this is a protected swing and this is a rebalance protected swing, neither should get ran if bullish. So you can then get your entry. You can have your stop here. So you have a smaller stop and a better entry, and you can then target whatever you want to target, right? Now, yes, of course, there will be times where the market will do something like this and it will just run straight to the targets and you will not get a trade. But majority of the time, you will get some sort of rebalance. And there will also be many times where the market does something like this and then it runs and sweeps this low without giving a reaction, right? And that means you won't get a trade. So you may miss out on a few wins, but you will miss out on more losses. And then the wins you get will be higher risk to reward anyway. So they'll make up for the potential lost wins, right? And what I mean by this example here is, say you were trading, you know, the IFVG, whatever, right? You would long here, stop here, and you get stopped out. But if you're trading this model, you're waiting for the rebalance and you're not just blindly longing, say 0.5 or OTE, you're waiting for a reaction. So here, if we just dump straight through it, you just would not get any trade, which I do actually find happens a lot, right? You'll miss out on a lot of bad trades just by waiting for that extra confirmation, right? Because that's the thing, in my opinion, this isn't proven to be a protected low until we rebalance the range and then show that we actually want to rebalance it, right? And what I mean by actually want to rebalance it is that we want to trade away now and we don't want to just come lower, right? So until that happens, this isn't a protected swing. And if it's not a protected swing, then it's not a valid place to put your stop loss, okay? That is the main idea of the model. Now, this also ties into the fact where I said about you're reacting, not predicting, right? If in lifetime you see us trade into this 15-minute gap, right, and trade away from it, you don't need to have longed down here and predicted that this 15-minute gap is going to hold, right? You wait for the displacement to happen, and then you don't need to long that displacement and, you know, anticipate that that displacement is going to work. You wait to see that extra confirmation of the rebalance of the range and then the trade higher, right? Now, I will also drop some source about break even, which uses rebalances, and it's a very, very good tip. I'll make a whole separate video on it, but it's just a way where you will rarely ever get break even unless you are actually wrong, right? Because I found I used to trade the IFEG model, right? And a lot of trades, you are getting break even and then it is running to your target, right? Because of you're doing improper break evens. But like I said, we'll get more into that in another video. So how do we determine a protected swing, right? Now, the way we do this is we look at, firstly, we'll come on, right? And we'll look at the higher time frame and we look at the swing, right? Like I said, you can react to this. So you can wait for a swing to be put in and then you can check if it's a protected swing by seeing displacement away and then the range rebalanced and getting respected. But obviously sometimes you do want to come into the day and you want to have a little bit of a knowledge, right? So what I mean by that is, like, literally for today, for example, right? I came into the market and I see this. I see on Friday, because today's Monday, on Friday, we swept this high and we displaced lower from it, right? Now we swept this high. Not only did we sweep this high, we swept it into a 15-minute bearish gap, an hourly bearish gap, and a 4-hour bearish gap, right? And we overall switched to bearish order flow. Now we are at all-time highs at the moment, but as you can see on Thursday and Friday, we switched to bearish order flow. So that obviously gives us confirmation that we want to go to some, you know, sell side targets, right? Here, potentially there, right? Obviously we don't know yet. But so we now have this, right? And when we trade lower from this, yeah, we believe this could be a protected low, but we don't know yet, okay? Now, like I said about the rebalance, how we know is we wait for a rebalance, right? So you're not longing, I mean, you're not shorting kind of any fair value gaps here, or you're not shorting the IFVG here. Obviously, this is the 15-minute time frame, but you're not shorting anything here because you are waiting for a rebalance, right? Now, in this case, we rebalanced to a very high premium 15-minute gap, and we did actually go above the 786. But we won't usually do this. Obviously, this doesn't matter. It doesn't matter if we do that, but it's nicer to see it respect these levels. But if we do close above them, it's not like the end of the world. It doesn't mean we are going to go for the high, because the whole idea is it doesn't really matter how close we get to this high. We do not want this high to get taken, and until it doesn't, and we get reactions showing that it won't, we are bearish, right? So I took a trade today. I'll go over the trade really quick just so you can briefly get an example, right? So this is our protected high. Now, obviously, we don't know it yet, but once we protected swing high, protected swing high. But once we trade into this 15-minute gap and then get displacement lower, right? It doesn't need to be confirmation like an IFEG close. It just needs to be some sort of displacement. We can be pretty confident that this is going to be a rebalanced protected swing high, right? And what I mean by that is it is a protected swing high, but because it has rebalanced the range of an original protected swing high, right? Stay with me. So that means this shouldn't get taken either, okay? Now, dropping onto the time frame, if this is our protected swing high, right, this is the 5-minute chart during New York Open. Obviously, we opened at 9:30 on this candle. Then we want to see this range get rebalanced and put in a high, which, as you can see, we do here, right, inside this 15-minute bearish gap. I think I do have a recap of this trade. It should be the video before this one, so go watch that for more in depth. But we have another rebalanced protected swing high. We then put in another rebalanced protected swing high, and the reason that is because it rebalanced, keep messing that up, because it rebalanced this range that has a protected high to the 0.5 at least, and then displaced away from it. And then that is where I got my entry today. I shorted the 30-second IFEG coming out of this because we had a bearish SMT2. And then I got my fixed 2R, which is what I aim for with this model, right? So this was a very, very nice trade. Good example today, even on a no news Monday. And then to prove, obviously, obviously we've already took our trade here, made our money, but to confirm this was a protected swing high, as you can see, we get close to it, but we do not take it. Even though this was an unfilled 15-minute fair value gap, the market doesn't take it because protected swing highs are more important and more, what's the word? Like they get respected more than an unfilled gap, right? Like most people probably wanted longs here to this unfilled gap, right? But it's not going to work because it's a protected swing high, okay? And that's what you need to understand. You need to have context for that, right? And then we trade lower, right? And what else makes a protected swing high a protected swing high is what's on the other side of the market, right? So we had this protected swing high, and then while we were traced into the range, what did we do? We built low resistance liquidity, right? We left London low here, and we left Asia low here, right? This is time-based ERL draws. They are very strong draws for the market, right? What do you think the market's going to do? If we start to displace from this 15-minute gap and we're showing that this is a protected high and we do not want to take it, do you think the market's more likely to go to these low resistance draws, or do you think it's more likely to go back up to this high, right? That's already swept a high inside fair value gaps. It's obviously going to go for the low resistance, right? That's how the markets move. They go from you want to always be in the situation where you're trading away from high resistance and you're trading towards low resistance, right? That does two things. That obviously makes your stop safe and makes your take profit, not safe, which is what you want because you want your take profit to get hit. And it also positions you in continuations instead of reversals, right? Now, obviously, on the lower time frame, this was a reversal, right? Say you were trading at the very top. Obviously, I didn't today because the very top got put in at 9. But say that was 9:30. For example, the trade I took on Friday, it was a 1-minute reversal, but it's a 15-minute continuation, right? And they're the best trades to be in. You do not want to be trading higher time frame reversals on the lower time frame because you will just lose, okay? Like if you want to try it 10 times and go for 15 RR, and when it eventually hits you make 5R, right, go for it. But there's going to be such a low win rate and it's not going to be accurate at all. So that is the basis of how to find protected swing highs and lows, and then how to find rebalanced protected swing highs and lows, which you always want to be trading away from, right? Now, obviously, for this example, I was on the higher time frame, but what you can usually do is just go on the 1-minute time frame and wait for us to put in something that looks like it could be a protected swing high, right? Now, today was obvious because we had this one and we had the low resistance on the higher time frame. But sometimes when the higher time frame isn't as obvious, you can wait for us to put in a prominent swing high or swing low, and you can then zoom out and have a look, right? So what I mean by that is if we've got a 15-minute gap here, right, and then we've got a 15-minute low here, and if you don't know that it's going to hold, right, you're not even looked on the 15-minute chart, if you wait for this and then you see displacement like this away, right, you can then look and say, okay, does this make sense to be a protected low? Is it a 15-minute gap? Yes. Okay. Do we have protected low to the left? Yes. Okay. Do we have draws above, right? Say we had London high. Yes, we do. Okay, so you now know, okay, this is likely to be a protected high, right? And you learnt that after the fact. You didn't expect a protected low to get put in this fair value gap. You waited for something to happen and then you checked what it was, right? So then what you would do is obviously, say we hadn't traded away from it yet, you put in this and we start to displace away from it, right? We start to displace away from it slightly and you're like, okay, this could be a protected swing low. You then wait for your rebalance, right? Bang, we rebalance to your 0.5. Do you long that? No, you wait for something, right? Whatever that may be, whether that's a CISD, like a lower one, whether that's a complete violation of the whole retracement leg and a CISD at the top, whether that's your lower time frame IFEGs, or whether that is just heavy displacement, right, in one direction, you can then long that, right? Because that has proven that this range wants to get respected. You can then put your low at this low, your stop loss, sorry, at this low, right? The rebalance protected low. You don't need to put it all the way. If they're very close together, you know, sometimes it might just be worth it. Just if it's a few extra points, like tiny bit less risk to reward, it is that extra bit safe, because obviously it will always be safer putting it at this low, right? There will be the odd scenario this low gets reran, but then we still continue higher, right? But that is just trading. Stuff happens. Majority of the time, this low should stay intact, and there's reason behind it, right? The reason it should stay intact is because it's done its job. It's rebalanced this range, right? If we are truly bullish, and obviously we aren't in extremely choppy conditions, and this has been a protected low that we don't want to trade back to, right? Say you're correct about that. And then this range has been rebalanced and we've displaced away from it. We should have no reason to come down here, right? We don't need to sweep the low and we don't need to rebalance the range. So why would we come down here, right? But then, say, like I say, we've got time-based draws and we've got low resistance up here. We do need to run that, right? We need to run time-based draws. We need to run low resistance liquidity. So that's what the market's gonna want to do. And for the entry models, it's a bit discretional, but it's the stuff you've learned trading ICT, right? If we make a bullish 1 minute gap here, just long that, right? If we make an IFEG, long that. If we're in CISD, like I've already said, whatever, right? And that's the idea. You're just waiting for the confirmation. You're letting it happen. You're not getting in at the very bottom of moves. You're letting the moves play out, and you don't even have to predict when the moves are going to play out. You kind of let them play out and then just check if it makes sense, right? Like I say, if we put in this low, even if there is a 15-minute gap, or say there isn't a 15-minute gap, right? Or you put in a low and displace away from it, and then say we've got a low, like, I don't know, right here that we're drawing towards. Is that going to be a protected low? Probably not, right? This is probably our draw on liquidity, and this is probably going to want to come and hit it eventually, right? And this is probably a fake out, and you will just get stopped out, right? But obviously, if this was a protected swing low, then this could be valid, right? It really all just depends, and that's why you do need to look on the higher time frame, right? Like if you go on the higher time frame, if I draw up here, so I've got a bit more space, right? Say this is the 15-minute chart, right? If you see something like this, right? And then you think this is going to be a protected swing high and we want to trade lower from it, right? But obviously eventually say we don't, okay? If you go on the 15-minute chart and you see this high, you don't see any PD array, right? You see that we are trading away from say an hourly protected swing, right? Say this is a protected swing, we're trading away from it towards an hourly unfilled gap up here. And then we've got a high resting here and a high resting here and a high resting here, right? And then we come here, don't sweep any of these highs, don't tap the hourly gap. We're trading from high resistance and then we displace down. Is this going to be high resistance? No, it's not, right? Context does matter. But like I say, you don't need to predict the context. You can just let this high, you can let this high form. You can then go, okay, I'll go on the higher time frame. You see all this stuff. You see that you look at the other end of the market. Is this good targets down here? No, it's high resistance, right? If this was low resistance, like this, then it would be a good target, right? And if we had an unfilled gap down here, then it would be a good target, right? But obviously, if it's not, it's not. So that's the thing. You need to just understand which side of the market you're trading on, right? So this is episode 1, right? It's just the main framework. On episode 2, I'll go over a bit more in depth and I will go over some more examples. Obviously, I just went over today's example. But yeah, I hope that does make sense to you. If there is anything you want me to go over, just comment below and I'll try and get to it. But that is the whole idea of the model, and it has a very high win rate. Obviously, go back test it for yourself because there is discretion to it. So you do need to see what win rate you can get. But I trade it with a fixed 2R, right? Most of the time, okay? If we've got a very, very, very strong draw, like a new day, new week opening gap, or like a cleared like 15-minute equal highs or lows. I will sometimes hold for higher RR, but majority of the time I'm just taking a fixed 2R, and I'm going break even when we rebalance the range, which is again something I'll go over to in the next video, as it's a more advanced break even method. And I'm getting about a 75 to 80% win rate, right? Which with a 2R system, which shows up pretty frequently, like you'll get usually 3 or 4 of these a week, is very, very good, okay? And it's like I say, it's not very hard. I don't need to come on and predict which 15-minute gap's going to hold and then bottom tick it. I need to just let it show me what it wants to do and then just get in on the continuation, right? So thanks for watching episode 1. Like I say, I hope most of that makes sense, and I will see you in the next one.